Hi everyone. Canoo stock is unfortunately down significantly off its highs, and it was down meaningfully in 2023. The stock price is down to 20 cents per share. So understandably, Canoo stock investors are curious where Canoo stock could be 1 year from now, as the company is finally getting ready to produce some of its vehicles. So in this video, I'm going to share with you my estimate for where I think Canoo stock will be 1 year from now. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in order to make my estimate for where I think Canoo stock will be, I'm going to use several estimates and assumptions to make this prediction, and I'm going to share with you precisely where I am getting these assumptions from. So I'll show you what the assumptions are, where I'm getting it, and what my estimates are, so that you could determine if my numbers or my estimates are too high or too low, and then you can make your own adjustments to my estimates to come to your own conclusion on where you think Canoo stock will be. So starting with, let's consider that Canoo stock price right now is 20 cents per share. It's down from $1.20 per share earlier in 2023, and it's seemingly moving down quickly. The next number I'm going to use is Canoo's price to sales forward ratio. The price to sales ratio measures what you are getting for the price you are paying in terms of sales. So what are you getting for every dollar in sales that you're paying? For example, in this first example, the market capitalization is $1.25 billion, and the sales for the previous 12 months were $185 million. That means you're paying a price to sales of 6.76. Similarly, if you look at the expected next year revenue, you would be paying $1.25 billion for $465 million in revenue expected, and that would mean the forward price to sales ratio is 2.69. The factors that influence the price to sales ratio include profitability. Of course, you would be willing to pay a higher price for a company that generates higher profits. That means $100 in sales will turn into $20 in net income for a company that has a 20% net profit margin. That same $100 in sales will only turn into $5 in net income for a company that has a 5% net profit margin. So companies with higher net profit margins tend to sell for higher price to sales ratios, all else being equal. Another thing that influences the price to sales ratio are growth rate expectations. All else being equal, companies that are expected to grow at a faster rate sell for higher price to sales ratios. Similarly, higher total addressable market opportunities tend to result in higher price to sales ratio because investors see this company being able to grow for a longer period of time before hitting the ceiling. And finally, cyclicality. Companies that are more stable and less cyclical tend to sell for a higher price to sales ratio because cyclical companies are seen as being more risky. Companies like McDonald's are seen as being non-cyclical. McDonald's does relatively well whether the economy is booming or whether the economy is in recession. And so investors would be willing to pay higher price to sales ratios for companies that are less cyclical. Investors use the price to sales ratio when a company has negative earnings, unstable earnings that fluctuate between positive and negative, and also the same for cash flow. If a company has negative cash flow or cash flow that's fluctuating from positive to negative, the price to free cash flow and price to earnings ratio are less informative, so analysts use the price to sales ratio. That being said, now that you understand what the price to sales ratio is about, let's look at some of my other numbers. So I'm also going to use the consensus estimate on Wall Street on where they think Canoo's revenue will be in the year 2024 and more importantly in the year 2025. So on Wall Street, the average, the consensus among those analysts that are following Canoo stock, they think revenue is going to increase meaningfully over the next 2 years, jumping to 196 million in 2024 and then jumping again to 1 billion in 2025. That's a massive increase from the 1 million it will earn in 2023. So things are going to get better quickly, at least in terms of sales for Canoo. I'm also going to assume that Canoo will increase its average diluted shares outstanding. The number of shares outstanding is an important financial metric. If a company issues more stock because it is running out of money or it wants to invest in a new growth project, it has the potential to decrease your earnings per share. Look up here, when I have a net income of 1,000 and shares outstanding of 100, my earnings per share is 10. You take the net income divided by shares outstanding and you get 10. But now let's say you increase your shares outstanding to 200 and you have the same net income of 1,000. Now your earnings per share is just 5. The same is true in the opposite direction. If a company is losing money on the bottom line and it issues more shares, it spreads out the losses across more shares, thereby reducing the loss per share, which is a tricky way to reduce the loss per share. Look at this point here. A net loss of 1,000 with 100 shares outstanding creates a loss per share of 10. But if you take that same net loss of 1,000 and you spread it across more shares, 200 shares, you now have a net loss per share of just 5. So it's a tricky accounting trick to get your losses reduced on earnings per share. So you want to take a closer look to see where the improvement in the loss per share is coming from. So now that you know the impact of shareholder dilution, you can see Canoo has increased its share count from around 200 million in 2022 all the way up to 621 million in the latest update. I'm going to use that number, and I'm going to assume that Canoo dilutes shareholders by another 150 million shares. And given that Canoo only has $8 million in cash and short-term investments as of its latest quarterly update, it's prudent to assume that they will continue selling more stock to raise cash, because they're going to need cash for a long time. Even though sales are going to increase, they're not going to be profitable anytime soon. So they're going to need more money from investors so that they can survive and they can bridge this gap to get to the point where they can be self-sustaining. Okay, so looking at those figures that we've highlighted, I want to draw your attention to this left-hand side here first. What I have here is the diluted shares outstanding. The 621,290,000 is the number I got directly from the latest investor update from Canoo. And I added roughly 150 million shares as what it will dilute shareholders in the next year. Now, I think it might be a little more than that, but I did it a little bit lower to make it a little bit more friendly of an estimate. So my estimate for the stock price is going to be a little more optimistic, on the more optimistic side. So keep that in mind. Revenue, the 2025 estimate of 1 billion in revenue, I got from the consensus estimate on Wall Street. I rounded it down to 1 million. And so if you take the total revenue divided by the diluted shares outstanding by the end of the year, Canoo is going to generate sales per share of about $1.30. Now let's go over here on the right hand side where I have the $1.30. Let me make this a little bigger for you. All right, where I have the $1.30 here. That means using the price to sales forward of 0.16 that we had here, if we assume that Canoo does indeed deliver the 1 billion in revenue and it generates sales per share of $1.30, and we assume a forward price to sales of 16 cents, that means Canoo's estimated stock price at the end of the year will be 21 cents. Surprisingly, that's roughly where it's at right now. If you round it up, it's 21 cents. So if it performs as expected for 2024, the stock price will roughly remain flat. Okay. However, If investors become more optimistic about Canoo and it is ahead of expectations, and I showed you the factors that could cause the price to sales ratio to increase, and investors were willing to pay a price to sales forward of 0.5 for Canoo, then the stock price could more than triple to 65 cents per share. Now, if investors were to get really excited about Canoo stock and the price to sales increases all the way up to 1, that could cause the stock price to increase by more than 6x to $1.30. On the downside, if investors become more disappointed in Canoo stock and they lose patience with this company and the price to sales forward falls to 0.11 from 0.16, then the stock price could fall to 14 cents per share, which would be down from the current price of about 21 cents per share. Okay, so those are just the estimates and various scenarios that could impact Canoo stock price for 2024. But I haven't given you my estimate. My best guess as to where I think Canoo stock price will be by the end of the year is the base case scenario here. I think that they'll go as planned, and I think the value by the end of the year will be around between 19 cents a share to 22 cents per share. I think that they're going to find it difficult to ramp up production and make deliveries at a time when the electric vehicle segment overall is struggling with oversupply. But I hope I'm wrong, and I hope that the stock price actually increases more than that, because I know a lot of investors are invested in Canoo stock, and I'd like to see them make money on this investment. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.